Hey, welcome to the Guaranteed Retirement Guy Show. Today we're going to be talking about the best strategies for long-term predictable income for your retirement. So we're going to be talking about annuities. Okay, we're going to be talking about contractual income, not variable. There are some variable contracts out there where the contractual amount is very, very low. We're not going to be talking about those. Okay, we're going to be talking about contractual income, and we're going to be looking at income riders. We're going to be looking at SPIA and DIA, as well as MYGA. Okay, now some of these are for lifetime income, and some of them are not. Okay, so you can kind of choose for yourself and decide which one works better for you. And of course, if you want to book a call, there is a link below this video. It goes directly to my calendar. Or you can go check my calculators on my website, johnstevenson.com, and you'll be able to look at all of the annuity options right there. Okay. All right. So let's dive in. So I am pulling up someone from Arizona. Okay. 65 years old. They are also married and their spouse is 65 years old. You notice that they are going to wait to take income until age 70. And they have $500,000 to put into an annuity contract. Okay, so we're looking at the income rider, and an income rider is just attached to a fixed index annuity contract. Okay, the fixed index annuity contract allows you to have some growth from an index, and it also protects your principal from market downturns. But the main object of this contract is the income rider. It's for highest guaranteed lifetime income that is joint. Okay, so even when the money does run out in this account, which it eventually will, the income is absolute and it is for both of your lives. All right, so let's take a look at this. $500,000. We're seeing all the companies here and all the payouts. Okay, you might have a favorite here. Maybe Allianz is your favorite. Maybe Mass Mutual is. But you don't have to do that. I mean, you can see Nationwide, they're A+ as well, and they pay out the highest. $55,000 per year guaranteed for the rest of your lives. Okay, so if you take this out for 30 years, you're taking out a lot of income, okay, over like what, $1.6 million. So that's really, really good. If you live longer, you live to 100 or 110, it keeps paying, all right? So $55,000 in 5 years. Now you might be thinking, well, John, I don't want to wait till I'm 70. Okay, I'm going to take my Social Security at age 67. I want to start at 67. Okay, absolutely. So what we look at is we'll say, all right, well, we're just going to wait 2 years, okay? The income will be less, but let's see exactly what that looks like. All right, so the income is less and Corebridge is actually the better payout. That would be the better option if you were going to defer it less time. So in this instance, it's 2 years, so $42,700, so almost $43,000. You notice Nationwide, the same one we were looking at that pays out more in 5 years, it still has a decent payout, but it's number 2 on the list. It's $41,412. Okay, so that is a decent payout, but it's not the highest in 2 years. If you want a higher payout and you want to take it earlier, consider Corebridge. Okay, so Nationwide is better for maybe long-term payouts. Now on the flip side, if you're thinking, well, what if I waited till 73 because it's in an IRA and my RMDs start at 73, I'm going to wait as long as I can, then you can do that. So we'll look at that and say, all right, Nassau is the highest, but they're B++, and for lifetime income, I would probably not recommend that. They're a good company, but I just, especially with the premium amount, I would want something that is a little bit safer. So Midland National, A+ rated, Comdex score is like in the high 90s. They are excellent. So you look at this, $66,750. It's a little bit less income, but not much. And then Corebridge is following close behind. So not bad. And if I look at this in a monthly amount, I'm just going to show you the difference. It's not a huge difference. Okay. You got $5,700 a month. Okay. Guaranteed from Nassau. And then you got $5,563 with Midland. Okay. So if you're looking at that, the difference in there, it's not a huge difference in monthly income. So, and you get a lot more safety as well. So that's what I would recommend. Otherwise, you can break it up into two different companies. Maybe you're thinking, all right, well, I'll put $250 in Nassau and $250 in Midland just so I can get a little bit more. You can do that. People do that all the time. So anyway, so let's go back to annual. And now we're going to look at SPIA and DIA contracts. Now with SPIA and DIAs, you got a single premium immediate annuity, and then you've got deferred annuities. You can do the same thing with income riders, and income riders usually pay out more. They're usually more flexible because you can activate income at, whenever you want to. You might wait 2 years or 3 years or 4 years. You might change your mind on the 5th year and wait another year. That's what's so nice about an income rider. It gives you that flexibility. With a SPIA and a DIA contract, you choose your date when you purchase a contract and it is set. All right, so we're going to go back and I'm going to say, all right, so 70 years old. Again, at 70, we already know it's $55,000 for joint payout and that's the highest, okay? So not bad from an income rider, but now let's look at a DIA. All right, so I'm gonna go back in here, and we're gonna pull up the SPIA calculator. And SPIA and DIA, they are the same, except DIA is just the same contract, but deferred, okay? So if I go into joint life, and same premium, and let's say they're both 65, and I'll just say, like, I'm gonna put their birthdays the same as well. I'm gonna make it exact, okay? All right. So go in here and say we want income in 5 years, okay? All right, 3829.93. So roughly 3830, okay? So 3830 times 12 is 45.9. So roughly 46,000. You're basically taking $9,000 less in income if you did a DIA, okay? Probably not the best option, but it's there just in case you want to go that route. Now I'm going to go back here and I'll say, okay, well, what if I want to wait till 73, okay? Again, we want to compare. I think the other one was what, 66? Yeah, 66,000 versus what? Hasn't even hit 5,000 a month. So we're still looking at like a 59, right? $59,000 a year versus 67,000 with an income rider. So anyways, all right. So we'll go back here and we'll say, all right, well, what if I want to take this immediate? I didn't even show you immediate on the income rider, but we'll say immediate. So, all right. So immediate income, didn't change anything else. We want to take it next month. Okay, now it's $29.59. Not bad. All right, so $29.59 times 12 is $35,500. Okay, so we're going to go right back to the income rider and compare that. Okay, just want to make sure. And income riders, you can do immediate as well. Okay, so we got $35,500 we can get with a SPIA, just a pure single premium immediate annuity. Okay, got a SPIA. It's going to pay us out next month. What is an income rider that will also pay us out next month and give us the same lifetime income payout? All right, it is so close. It's like $200 more, okay? So, and again, both of these, when you're looking for cash refund options, you can get that, okay? So you can get your premium back if you die too early. It's the same thing with an income rider. The insurance company is not going to keep your money. Whatever money is left in that account will be refunded to your beneficiaries, okay? So it's very, very close. You can see the income rider, though, is still beating the SPIA, but just by a hair, okay? All right, so let's look at the last option. We're going to go to the MYGA calculator. MYGA stands for multi-year guaranteed annuity. Okay, they are the annuities world version of a CD. Okay, so if we look at these, we'll see the rates are around 5%. You got 2-year, and this is showing the top 3, by the way. There's hundreds of them. And if you go to my website, johnstevenson.com, you'll check the MYGA rates. You'll see hundreds on each of the term, like 2, 3, 4, 5, and so on. So there's lots and lots of options out there. This is just showing the top 3. Okay, so if we look at the top 3, for 2 years, they're all in the 5s. 3 years, it's getting a little bit higher. 4 years, a little bit higher. And 5 years, it's even higher. So 5-year, the top 3 is 5.6. But SBLI is an A-rated company. Exonic is A-, so they're in there as well. But I would say if you wanted higher ratings, do SBLI, you'll still get the same growth. But if you want more opportunities for withdrawals later on, they only allow you a 5% withdrawal. Whereas with Exonic, they actually allow 10% after the first year. So they give you a little bit more leeway, and that's really, really nice, okay? You got 6 years, 7, and so on. So we'll go, let's say we said, all right, well, we want income for 10 years. Because again, we're talking about income, predictable income. And people will use these for income. So if you look at this, I could say, all right, well, I'm going to strip off the interest, okay? Maybe I'll leave the $500,000 there. I mean, if you don't, you can see it compounds to $866,000. But if we're doing this for income, you can absolutely do that. And people do it all the time. You just, once you set it up and you purchase the contract, you'll set up a systematic withdrawal and then it just starts dropping in your account. So it's really that simple. All right, so if we look at this, we can see that it earns $28,250 every year. So at the end of the first 12 months, you could take those earnings out, the $28,250. In fact, you could take more. You could take up to 10%, which is nice. But if you just want to live off the earnings, you just take out $28,000 a year, every year. And then by the end of 10 years, you just take your $500,000 and do something else with it. Or you might think, well, I'm going to defer taking income, just like my other example. Maybe I want to defer for 5 years. Well, 5 years from now, you can take $55,000 in guaranteed income. Remember the last scenario with the income rider, you're taking $55,000 a year as a joint payout for the rest of your life. It's guaranteed for the rest of your life. So the same scenario with this is say, well, if I wait 5 years, I'm going to let this thing grow to what, $658,000? And then it's still earning the 5.65. So that's going to give me $37,000 a year every year for 5 years. And then at the end of 5 years, I get my $658,000, out of that, and then I can put it into something else. So the difference is you're not setting up for lifetime income. You're setting up for predictable income for 5 years. If you decide to wait that long and then take income for the last 5 years, you could certainly do that. And you have the flexibility to take all of the money out at the end of the term, whatever, the principal plus the interest that you left in there, and roll it into another MYGA if you want, or into an income product. You can do that. Although if your sole purpose is income, you are still better off buying an income rider right from the beginning, because it's going to give you more income, much more income later on, as you can see. So anyways, there's just different ways to skin a cat. Okay. If you're looking for guaranteed lifetime income, that is the most you could possibly get, then I would recommend looking at pension income from an income rider. Okay, that's usually the highest paying and it's the most flexible. Otherwise, you could look at a SPIA or a DIA contract, or if you're not worried about having, you don't want lifetime income, you want to be able to use money for something else later on, then a MYGA contract is great. Okay, and I sell all of them and I show everything that is available. So again, I would invite you, go to my website, johnstevenson.com. You'll see my annuity calculators. You'll be able to play with them and kind of say, all right, what is best for me? And then at that point, if you want to book a call, there's actually a link on my website where you can connect with me there. We'll get on a Zoom call and I'll show you everything that's available, answer your questions, and of course, sell you an annuity if that's what you're looking for. If not, I'm going to try to hard sell you as well. Okay. So really what people reach out to me for is for education. And of course, the way I make money is by selling annuities, but people don't like to be sold. And so I understand that. And I know that sometimes it just takes a while to kind of digest and decide, all right, is this right for me or not? So don't be shy. If you want to reach out, you got questions, please do so. Okay. Happy to help. There's also a link below this video that will link to my calendar as well. So anyways, hope that helps. If it does, hope you like, subscribe, share the video, and comment below, and look forward to seeing you next time.